This video is how much does insurance cost for masonry contractors in Maryland? I'm going to go through liability insurance, auto, and workers' compensation insurance to give you an idea on how much it should cost so you can build your budget accordingly. I'm also going to give some ideas on how to create competition in the marketplace to make sure you're getting the best deal. Let's get into it. For a one-person business, for $1 million of general liability per occurrence with a $2 million aggregate, you're probably looking in the $800 to $1,200 range, which means when you start adding additional employees, you can kind of stay on that schedule, right? If you got two people, 1,600 to 2,400. You see what I'm saying here? You can just kind of do the math. Now, there are some benefits of scale where it's not going to go like that for forever, and you can create leverage to negotiate downwards the larger you get, but that gives you a benchmark. Now, some things to keep in mind with liability insurance is one, it's based off of payroll for the most part. So as your payroll increases, so too will your general liability insurance. Another thing to keep in mind is it's going to be based off of the type of work you're doing and where you're doing it. So if you're working on industrial buildings, that's going to be different than working on homes, or it could be different from office buildings. It's also different for remodeling versus new building construction. So the type of work you're doing and where you're doing it matters a lot. It also matters if you're going to be in a contract that requires you to carry umbrella insurance too. So if you have to have more than $1 million of liability insurance, the you're going to have to pay for additional coverage limits. So if you have to have a $5 million umbrella, you're going to have to tack that on and build that into your budget as well. Now, for your auto insurance, it depends on which part of the state you're in. So broad spectrum in Maryland, probably about $1,500 to $3,000 per vehicle. Now, let me give you some of the variables there. It depends on what type of truck we're talking about. If we're talking about your standard pickup that's less than 10,000 pounds, and you're in the western or central part of the state, it's probably more in the $1,800 to $2,000 range. But if you're down in DC or Baltimore, you could easily get into the 2,500 to 3,000 range. And that's really just because you're in more congested areas that are more likely to be in accidents. And that matters a lot. Now, another thing that matters is the weight of your vehicle. So the bigger it is, the more damage that vehicle does when it's in an accident. And when you look at the auto insurance policies, a lot of times they'll break down the cost based off of what you pay for liability insurance and also what you pay for comprehensive and collision, which is the physical damage to your vehicle. And what you'll see is there's the most range on the liability insurance side. And what impacts it the most is the weight of the vehicle, because if an international truck plows into the back of a car, that's going to cause a lot more damage than a pickup truck, right? So the other thing that's going to factor a lot in your auto insurance pricing is your claims history in the past and your driving records of your employees. If you've got a track record of vehicle accidents, that factors into how much you pay for auto insurance. And also, if you've got drivers with a lead foot, you're going to end up paying for that too. So if you're looking to keep your auto insurance costs down, you need to make sure you're doing what you can to manage your fleet well, train your drivers, but hire good drivers. It's probably the number one thing that you can do. If you hire people that drive well, they're going to be less likely to be in accidents. If they have a history of aggressive driving, those are the people that are more likely to get into accidents. All right, so now let's get into workers' compensation insurance. It's probably the bane of your existence. It's based off of the type of work you do, and then payroll indicates how big the policy is and how much you pay. So the class code for masonry right now in 2025 is running between $5 to $7 for every $100 of payroll. And if you've got $1 million of payroll, you're going to pay a lot more than a contractor with $100,000 of payroll, probably about 10 times as much. Now, there are a couple of other factors that weigh in. Similar to liability insurance, it matters a lot what type of buildings you're working on. If you are going more than 3 stories up, that's going to make your workers' compensation more risky. If you're going into different types of buildings, it may limit which companies are interested in working on your account. Also, workers' compensation insurance, more than any other line of coverage, is impacted by your claims because you are going to get what's called an experience mod. An experience mod puts you on a bell curve compared to other masonry contractors. If you have more claims, it's going to be over one and you're going to pay more for your workers' compensation. If it's under one, you're going to get a discount. And you're going to pay less than your peers. So it's the one line of coverage where you are really rewarded for controlling your claims. I said it in Masonry Insurance 101. I'll say it here too. If you want to control workers' compensation costs, you need to make sure that your subcontractors have their own workers' compensation insurance, or you need to budget in how much you're paying them to your workers' comp. If you have uninsured subcontractors, you're going to end up paying for them whether you like it or not. It's just a matter of whether it gets caught at audit or if you're dealing with it on the front end and you get to spread that cost over the course of 12 months. Now, if you're asking yourself, how do you pay less for all these things? The number one thing you can do to control costs is have a good strategy for negotiating with the insurance marketplace. I've got other videos that really describe it. The one's called Solving the Premium Problem. But here's the deal. If you just spray the marketplace without a good plan, underwriters are not going to give you the best pricing and the best coverage. The way you get the best consideration from the best underwriters is you have a strategic approach. You pick one broker, you tell your story well, you explain claims, you explain your controls for preventing claims, and that's how you get underwriters excited about you. The number one thing that can help you is if there's competition between multiple companies, but also if those underwriters believe that they have a shot to win the account. If you go to the market too often, they're going to get tired of you. They're going to stop working on your account. If you go to the marketplace with 3 different brokers, they're not going to be sure who you're going to buy your insurance through. That's going to make them less likely to work with you, which all comes down to one broker, one story, with a good, compelling story on why an underwriter could win and how you control your claims. All right, I hope that helped. If it did, please hit like and subscribe. If you want to talk to me about your program, my contact information is going to flash up on the screen. It's also going to be in the description. If this is helpful, please hit like and subscribe. It helps other people like you find the content. And as always, thank you so much for watching. Please go build something great.